First and foremost, you're going to have to be able to find these deals. Where do they come from? You will have to lean on a realtor, not just any realtor, but ones that actually can find these deals, that list these types of properties. Realtor that's listing the home determines that, hey, this person has a VA loan and a great rate and it's assumable. From there, they need to get you in contact with the lender, the current lender or servicer, whoever the current seller, their client that's selling the property, whoever they're making their monthly payments to, because that is who you would have to deal with as a potential buyer, be it a civilian, a non-veteran, non-service member, qualified service member, or a vet. You would have to deal directly with the seller's lender. Typically, you're going to ask for an assumption package. In that assumption package, you're going to go through the qualifying process to make sure that you have the ability to qualify for said loan. And if all works out, what are the benefits? The benefits are you get the balance, the remaining or the current balance of the seller at the rate that the seller has. Now, I know you're excited, and I know folks online just tell you the things that you want to hear, but here we want to keep it real, right? So you might be asking, hey, Rob, why are you doing this? Because you're not going to benefit. I always do things like this because we need you to benefit. And I know this is something that helps with affordability in the environment that we're in. So the more folks that we can help become homeowners, it benefits me. It benefits all of us in a lot of ways that don't necessarily correlate to dollars and cents. We just want you to be able to do it right, have some real understanding of the process, and not get caught up in the hype. Because with this social media and internet stuff, it could get real hypey. It could get hyphy. But anyway, I digress. You're going to reach out to that lender that has the listing. They will have gathered all the assumption information from their seller's current lender. You get in contact with that lender. You start the process to be qualified with your income, assets, credit, fully qualified. Then I let you know, hey, make sure and know and understand that you're just getting the balance, the loan balance, and the interest rate, or the principal and interest portion of the payment. Taxes and insurance probably aren't going to follow, especially if they're 100% disabled. Wherever they're going to be going, they're probably going to take that exemption with them. So keep that in mind. Now, let's talk to the sellers. This is something that sellers need to know. Let's be balanced. Why would a seller do something like this? Again, in a higher rate environment, folks can't qualify with the higher rates. They have an asset with the rate. Seller, veteran, beware of the following. You want to make sure that if this person is able to assume this loan, that you have your liability released. There's a exemption of your liability, and your servicer, more times than not, that should be the case, but you just want to make sure, meaning that, hey, once this loan is assumed, this either veteran or civilian is only getting the benefit of the eligibility, my certificate of eligibility, my housing benefit, and it's not going to affect my credit, because you don't want it to negatively affect your credit in the event that this person that's assuming, what if they go into a default? What if they go into a short sale or something of that nature? Hopefully that's not the case, but something you need to be aware of. So the way around that is to make sure that your servicer, right, when the assumption happens, that your liability has been removed and it's placed on the new buyer that's assuming the loan. Now, if you're dealing with another veteran or someone that is a qualified military member with a certificate of eligibility benefit, you want them to substitute. Take what's on your COE and put it on theirs. You want to release your benefit so that you can go on and always have that 100% benefit to you whenever you're buying a home. Now, one thing I will say, veteran beware. Again, if this person, that's a civilian, if they default, short sale, or anything of that nature, you lose that benefit going forward. So it's all good as long as you understand the pros and the cons from a selling perspective and from a buying perspective. Another key point is with the closing costs, okay? So you as a buyer of this home that you're gonna assume the loan on, your closing costs aren't as expensive. You're probably gonna deal with some type of application fee. There's no appraisal fees or anything of that nature. So The closing costs aren't as expensive. Again, if you have a veteran that is 100% exempt and they don't have an escrow balance, you got to be prepared to bring those funds to fund that escrow account based upon you and your tax situation. So just a couple of things to look at. Also, there's a funding fee of 0.5% if you're not an exempted veteran. So if you're not a veteran that's coming in to assume this loan and you don't have a 10% or greater disability where you're exempt from the funding fee, then you'll have to pay 0.5% civilian and or non-exempt veteran or qualified military member. And those monies go directly to the VA to allow this program to continue to work. $400,000, and the loan that you could assume was $200,000. This is where some people might fall off, or this might not be an option for them, because the difference, that equity position between what's owed and what the sales price is, you would have to fund that. You might be able to financing in the form of a second, and VA would allow that. For the most part, you have to have the monies to make up the difference, that equity position. You can't, even if you're a veteran, you can't use your certificate of eligibility and say, okay, well, my COE says I could do 400. Not gonna work. You're just assuming whatever the loan amount is, or the loan balance, and the interest rate. That's what you're doing. So you want to keep those things in mind as well as you look at this strategy. But overall, excellent strategy if it fits and it deals with affordability. So there you have it, guys. My time is up, but I thank you for yours. As we always say, let's be good to one another. Let grace abound. And until the next time, peace. Y'all be blessed.